July 11th, 2024. Whenever you get, a really big spike like this, especially, with the context on the daily chart of us being a little bit overbought, I'm actually going to go over that first, I think. But I was mentioning, this is lagging for some reason, so sorry if it's showing up slowly. I was mentioning that, well, first off, we had this measured move, right? And so whenever you see this on the open, you should probably be thinking, we're 11 bars into the day and we're already down basically 30 points. So we're only 11 bars in. What are we going to do for the other 70 bars? The answer is probably we're going to go and try and test outside down. You can see the measured move down, which we ended up hitting on bar 27, was basically exactly the outside down target. A little bit past the outside down target, but we were obviously paying attention to that measured move. So whenever you get this spike on the open, you should reflexively be thinking, 60% chance we're going to get move basically down to that target. Obviously, it's a bit difficult to stay short throughout all of this because, it's pretty hard to stay short above bar 20. You're probably going to get a couple legs sideways to up, but you also have to be thinking, when you get a bear bar here, it's really hard to sell. I thought bar 22, it's a really tough sell because of how big this bull bar was. It makes you wonder if there's going to be buyers below it. And generally this won't happen in a bear trend. You get a huge bar like 20. But the other side of that coin is that we're probably going outside down and we still got 10 points, 15 points till we get there. So if we're going to do that, why wouldn't we just go straight down? And my thinking is kind of similar on the daily chart. So we have a big outside down bar here. I think that, to me, that signals basically the end of the bull trend. And while we're probably going to have to go sideways to down because of how strong this is, traders know that we're probably getting to the June 28th high. Why the June 28th high? Because it was a breakout point. Here, you see there's a really small gap. It might even only be a tick. Yeah, you can see there's a one tick gap here between these 2 days. It's highlighted there. It's pretty much impossible to see unless you're zoomed all the way in. But the low of July 5th and the high of June 28th do not overlap. So we're probably going to have to get back to the June 28th high. And traders who are looking to buy, so bulls, are probably thinking to themselves, well, I could buy up here, but why would I buy up here when I'm pretty sure we're going to go right here? So, do I think that, tomorrow we're going to get another, 50 or 60 point sell off to here, or sorry, only 40 points? I don't know. We definitely could. I wouldn't be all that surprised if we get to the June 28th high tomorrow, because it's a Friday. In addition, actually, I won't talk about the weekly chart to the end, but I just thought it was interesting because it's definitely possible we get to this high. So I would pay attention if we start to get towards this high, 5585. I would pay a lot of attention to that tomorrow because there probably will be a lot of support if we get back to this price. And I don't think we won't get there. I really doubt it. July 1st, yeah, we're not going to get there tomorrow. But the July 1st high is also a spot where bears got trapped, and they should be scaling in, and they should be able to get out at break even. Additionally, if you took a sell, like selling above this bar, it's still in a bull trend, so it's not great. But those traders, theoretically, 80% chance we're going to get to that midpoint of this low and this high. And to no surprise, it's right at this June 28th high. So that's not a coincidence that the low of this bar and the high of this bar, the midpoint is right here. So I don't know, maybe 70-80% chance we're going to end up getting back to this area, and I think there'll be a bounce probably when we get there because of those two reasons I just mentioned. So coming into the day, the market's relatively overbought, and we had a small pullback bull trend day yesterday. When we have a small pullback bull trend day, the odds are increased that we're going to end up getting. When you have a small pullback bull trend day, 75% chance of 2 hours of sideways to down trading starting by the end of the second hour on the following day, a 50% chance of follow through buying, and only a 25% chance of a follow through small pullback bull trend day. I think your job as a trader on the open is to try and pick out potential highs and lows of the day. Basically the first 10 to 15 bars, you should probably just be looking for the potential highs and lows and trading them accordingly, looking for the opening swing. Bar one, the doji bar, really not very good for either side. If you're a bull, you're thinking we're probably, well, first off, the thing you have to recognize is how many bars since we've had a close below the moving average, right? Since basically over here. So it's been 63 bars since we've had a close below the moving average. So that's an overwhelming problem for the bears to start the day, is that, probably the first time we get below the moving average, there's going to be buyers. Now, that's a general statement, when you see 8 and 9, you should not be buying. You should be selling because, it's a special circumstance. But in general, if we drifted slowly down to the moving average in a more calm way for the first couple of bars, the overwhelming odds were that there was going to be buyers there and we'd get some sort of bounce. An inside bar on bar 2. So a bear bar, possible high of the day, but not very likely. Bears are hoping it's a lower high double top with this, and we're going to get a giant bear follow through bar. Probably not going to happen. Think just sideways on the open. It seems like we have this, and this might end up being some sort of bull flag, and then we get another leg up. Bar 3, a bull bar closing near its high. It's a bull breakout bar, and we might have to go a little bit higher, but I'd rather wait and see follow through. Again, the odds are pretty against another strong follow through day for the bulls. So, if anything, you should be very cautious as far as buying goes today. However, we still haven't been below the moving average in quite a lot of bars. So I'm not so sure. That there's going to be as many sellers up here. Probably though, buyers looking to buy lower rather than buy above. Bar 4, a bear bar closing near its low. I actually got to put bar 4 in this 1 and 3. Oh, did I already put it in? Okay. I thought bar 4, you could sell 4 if you're willing to scale in. I think it's another one of those trades where, 30% chance that bar 4 is just the high of the day and we start some sort of sell off. Again, the problem with selling is that you realize that there's probably going to be buyers at the moving average the first time we get there today. That doesn't mean that we won't continue. Down, but you just have to be expecting, in general, probably a bounce when we first touch the moving average today. Disappointing follow through on bar 5. So if you sold below 4, there are 2 ways to manage the trade. You can either see bar 5. Well, I suppose there are 3 ways to manage the trade. There are 2 optimal ways and then 1 not so optimal way. One of the ways to manage the trade would be to sell below 4 and you see 5 and you're disappointed and you use the tail on bar 6 to buy back your short around break even, and that's causing the rally on bar 6. The second way, which is also fine, is to sell below 6 and scale in above 6, betting that this reversal up is not going to be all that strong. And that will probably at least get back to the bar 5 low at some point later today. And the third way, which I don't, this is not great. This is more of an algorithm trade, I think, if you're going to do this, where you just sell and put a stop above here and you take a chance you're going to make 30 points, only risking, 4 or 5. But that's just a difficult thing to do because you're going to lose the trade so often. And then the couple of times that you don't take it are going to be the times it works that would have made up for all of your losers. So that's not a very optimal way to manage that trade. Bar 6, an outside up bar, bull bar closing near its high. I think it's mostly just bears buying back their shorts, and that's what's causing the bounce here. It's maybe, we have higher highs and higher lows most of the day, right? So we're trying to break out to a new high. However, when we broke out to this high, the bears made money selling. So when we break out to this high, the bears will again also probably make money selling. 7 consecutive bull bars. We have 2 good bull bars closing near their highs, 3 straight bull closes. This is a reasonably strong bear bar. I'm having difficulty buying up here, 10, 15 points above the moving average. You're probably going to get something disappointing as follow through. Are we always in long? Yes. Is it consecutive bull bars closing near their highs? Yes. So the bulls do have that going for them, but they're not really big. Look at these bull bars. They're really strong and no tails. And here you have a really big tail. It's a reversal bar. They're consecutive reversal bars, right? It's not really consecutive bull bars. These look more like reversal bars. And reversal bars in the start, they can be good in certain contexts. You want reversal bars in certain contexts. However, this is not that. If you're buying up here, you're hoping 6 and 7 is the start of some sort of strong bull trend. And instead, you're getting big tails. So the market, let's take a look at it. The market's reversing down during these bars. So it's not going to be as good as you'd like it to be. You can see it's just a bull channel. So it's more of a channel when you're getting these reversal down, rather than something like the strong bars like this. You can see it ends these bars, how they look differently than this sort of rally. Bar 8, a reversal down. I think, so the thing to keep in mind is that by the close of bar 6, well, the first thing, like I mentioned, I think your job on the open, as a day trader, especially if you're trying to trade Al Brooks methods, is to look for the opening reversal and the opening swing. And by looking for the opening reversal and the opening swing, you can really just say you're looking to identify the potential high or potential low of the day. I have a much easier time thinking about this when I think of it as identifying the high or the low of the day. Bar 8 is an outside down bar. You know that by the close of bar 6, there's a 50% chance that you've seen the high or the low of the day. By the close of bar 12, there's a 70% chance you've seen the high or the low of the day. So you can assume that by the close of bar 8, if it's 50 here, it might be more like 60% chance you've seen the high or the low of the day on the close of bar 8. And if you're looking at this, bear bar closing near its low, it's, you could argue it's a low, so a wedge, I suppose, a low 1, a low 2, a low 3 on the open. I look at it as kind of a low 2 because bar 2 was not credible really for a sell. I think bar 4 was, a lot more credible, and then bar 8 makes the most sense. So I thought selling below 8, 50% chance that this is the high of the day, or at least the high for the next couple hours. Might even be 60%. I'm not really, I'm not confident enough to say 60%, but I would not argue with someone if they said that 60% chance that's the high of the day. But I personally labeled it more as a 50% chance that bar 8 was the high of the day. And we get big follow through, sure enough, bear bar closing near its low on 9. Again, the big problem with selling in general up here was how strong this bull trend day was. You know that you're probably going to get a couple legs sideways to down for a couple of hours today, but you're going to need something really strong from the bears. And that's exactly what bar 8 provided. It's a really big bar closing on its low and a big outside bar. So it's basically a perfect bar for the bears. And 9 is pretty much perfect follow through. It's a huge bear bar closing near its low. You know that the first target for the bears is probably going to be the high of this bar because we have an open gap here. So you would imagine that we're probably going to get back to this high. Consecutive bear bars closing near their lows, 8 and 9. We're probably going at least a little bit lower. You'd expect a second leg sideways to down. This might even be strong enough for 3 legs down. And then you get a huge bar on bar 10. And when you see bar 10, you should immediately probably be thinking outside down. When you get bars that are this big and this dramatic, and we're only 10 bars into the day, odds favor, we're probably going to end up going outside down. So I think maybe not quite odds favor, but I would say, at least a 50% chance of this becoming an outside down day, if not a little bit more. When you see enough outside down days, you start to learn what they look like in the beginning of the day. And this looks the way that an outside down day in this context would look. Again, the market's kind of overbought or it is overbought. And the more overbought the market gets, the more violent the reversals down tend to be. So the more that we rally, the more violent the reversal down tends to look. 11, more follow through for the bears. So 4 straight bear bars. When you get these 4 straight bear bars, you should be thinking 60% chance of a measured move down about this size to around, and it's obviously, which is what we got to, but 4 straight bear bars, we're probably not going straight to that low, but you would expect that we're going to get probably sellers above 11. And if we do pull back, again, it's probably going to be a minor reversal, and you can expect that we're going to get back to the bar to Wednesday's low at some point. 12, probably sellers above 11. I suppose you would argue for the bulls. It's a pullback to around 50% of yesterday's bull trend, but there's nothing to buy in here. The sell-off is far, far too strong, so it's not worth. No one's buying here. Traders are more interested in selling above 11. I think 12 is due mostly to bears taking profits. It's logical to take some profits in here, but you don't have to because you realize that we're probably going to get a lot more to the downside. But also, if you sold, your risk is huge. So some traders are going to at least take a piece off, and that's what causes the bounce on bar 12. Bar 13 is a low 1 short. It's okay to sell 13 because it's a low 1 in the spike phase of a bear trend. We have an open gap here with, you can see even if you bought below the low of the day during bar 9, betting there'd be buyers at the moving average, you ended up getting trapped here during bar 10. So even if you bought below 1, as 9 was selling off, just basically betting on a bounce, and that 6 and 7 weren't going to completely be a trap, you got trapped on 10. So we have a lot of trapped bulls right now. We're probably going lower. You can sell 13. Where's your stop if you sell 13? You can probably put it above 13, but there's probably buyers or there's probably sellers somewhere up here too. So I would probably, if I were to sell, I would sell small and maybe put a stop just up here. It's probably a bit of a skunk stop to put a stop up here, but the reality is I'm never letting this stop get hit. If I'm selling, I'm just trying to give myself some leeway as to my decision making, rather than it's harder to do that with a tight stop. So if I'm selling, theoretically your stop's supposed to be up here, but I think it's okay to just put it here and see what you get. If you get some sort of second reversal against you, it's okay to just get out of the trade. 14, another bull bar, big tail on the top of 14. It's not really, good follow through for the bears who are looking to short, but it is follow through. Again, we should get to at least the bar 11 close, and the measure move down, like I said, is a target, and outside down is a target. 15, follow through for the bears. We could be starting a channel. You can see, potentially have a channel line here. Good bear bar, but your risk is large, and you have big tails here and big tails here. So I'm not really all that sure how much lower we're going to go before we get a pullback. 16, a disappointing bar, a doji bar. So a bull close, not what the bears wanted to see. We're probably going to continue mostly sideways here. Outside down, sideways to down. Again, it's still always in short. So I think we flipped to always in short on bar 8, and there's no reason to buy anything here. There's no credible reversals up for the bulls. So it's still always in short. The question is, how much lower are we going to go before we start to pull back? Outside down, 17. Again, this is all sell to close. Can you sell below 17? I don't know. I mean, it's kind of hard to do that. You're selling pretty low. If you have a wide stop and are willing to scale in, I suppose it makes sense. And then you get a big bear bar closing near its low, 18. 18 is breaking out of the channel line here. You could argue this whole thing was a triangle, very downward sloping triangle. And really, the bears break up. You could argue breakout mode of some kind, but bears trying to get a breakout below, hoping this was essentially a downwards bear flag. So this was a pullback from here. If you think about it, it was still a pullback for the bears, but it was an upwards pullback. So it was a bull flag, but it sloped upwards. This, you could argue, is some sort of bear flag that's sloping downwards. You get a breakout below on 18, which is pretty climactic. Again, you would imagine there's going to be some profit taking pretty soon here. But at the same time, this is getting pretty close. At this point, we're 15 points away, and the bears have covered more than twice that so far today. So you have to imagine we're going to get here. The path we take to get here will probably be tricky. And, usually when the market goes and vacuum tests a magnet, it's going to trap traders out first. The reason it traps traders out is because once they exit here thinking that, okay, well, the bull bear trend's probably over. Maybe we get here later today. And then you get a bear bar closing near its low, and traders have to chase the market down. So 19, a doji bar. We're probably going to end up bouncing at least a little bit, maybe back to the bar 17 close, or low at least. And then 20, a big bull bar closing near its high. This is a problem for the bears for sure. 20, a big bull bar closing near its high. Usually when you're relatively deep in a bear trend and you get a big bull bar closing near its high, it's going to be the start of the trading range. Doesn't mean we're not going to get another leg down. This is kind of a special circumstance because usually, pretend that this bar happened. So just take this whole bear trend and move it up 30 points. I think if you move this whole bear trend up 30 points, and let's say bar 21 happens somewhere up here where we were just basically testing yesterday's high rather than having the magnet down here, I think 20 probably becomes the start of the trading range, if that makes sense. So usually when you get 20, the bear trend is probably over and we're going to start to go a little bit more sideways. Again, it doesn't mean we're not going to get one more leg down. If you buy above here and you put a stop below here, that's a bad trade. You're going to get stopped out. But I think this was a special circumstance because the leg down might end up going a little further than it usually would because yesterday's low is such an important magnet at this point. 21, you could argue it's an outside bar, but not closing very strong. Probably buyers, theoretically buyers not too far below because of how good 20 is. But again, you're not buying below this. Bulls are not making really any money. Some limit order bulls are making money. They buy below 12, they scale in, they scalp out. They buy below, 16, they scale in, they scalp out. But these are not, ideal trades, and they're really, really tough to take. So just really not worth doing. Your time is better spent taking sells. 22, a bear bar closing near its low. It's a tough sell. Like I said, you can definitely take the short. And if you're taking the short, your premise is that we're just going to get a vacuum test of yesterday's low, which we did. So if you took it, you did pretty well and you made money. But I think it can be a little bit tricky to sell after such a big bull bar on 20 because your instinct as a trader when you see this is to not look to sell below it. But this is a special circumstance, I think, where you can take the short. And then you get a big follow through bar, not surprising, 23. So if you're sitting there asking yourself, well, we got a really big bar 23, why didn't we get all the way down to the magnet? Sometimes the bar will get bigger and you'll get a vacuum test down. But the problem with 23 closing where it was is now the trader's equation really isn't all that good. If you sold below 22, you're risking 10 points and you're trying to make 15, and you thought, you had a pretty reasonable chance of getting there. Additionally, if 23 doesn't vacuum straight down, you're probably just going to exit the trade. So your risk is not very much and your reward's pretty reasonable. But now you're down here. If you're selling below 23, you kind of have to risk 20 points and you're only trying to make 4 or 5. So the risk reward is now not very good. And sure, is there, 75, 80, 90, whatever basically guarantee that we're getting down here? Yeah, but what if we start to get a pullback first that makes traders uncomfortable? Because that can happen. Kind of the same way that this happened. So it's kind of difficult to look to sell down here, which is why you saw the momentum dry up on bar 24, 25, and 26. Yes, there's still bear bars, but you can see the bodies are shrinking, right? Over here, we have, they got a little bit too big on 10, but uniform bodies, 8 and 9, and then, good, similar size bar on 22. And now we have shrinking bodies, 24, 25, 26. So it seems like a weak channel is starting. Again, it's hard to sell down here. You could argue this is the bear channel, and this is where the trading range started, 24, 25, 26. So you're expecting a bounce back up to the bar 24 high at some point later today. However, like I was saying, it's hard to short down here because that traders are just trying to get here. And this is a little bit overdone. This is pretty overdone at this point. 27 traded down, and then you can see broke below yesterday's low. If you were trading always in and you decided not to get out below yesterday's low, you could probably just put a stop above 25. You'll end up getting out above 32, and it's not worth selling any of this because this is so strong. It's going to get another leg sideways to up. Is this strong enough for another leg sideways to up? Probably, but like I said, special circumstance because of yesterday's low. There's no special circumstance here, so you would expect a second leg sideways to up. Sellers above 27 during 28. A big tail on the top. Not really worth doing anything. Bears might get out a couple points above 27 or just put a stop above bar 24, citing that's the top of the channel. I think either one of those things is fine to do. Reversal down on 29, a bear bar closing near its low. We're probably going at least a little bit lower. It's not a good idea to buy above 27 and put a stop below it. So, maybe in theory we should go to the 27 low and stop those traders out traders who decided to do that. But again, I don't think there's much to do here. I'm pretty much done selling. The only sip of water. The only thing that, like I had said, was there was it was a real possibility that we got vacuumed down to 5,600, and this just became another one of these just outlier 120 point, 115 point, 85 point days. Just became one of those. There was a possibility that happened because it does happen in these kinds of situations. So the context was correct for one of those bars. And if that were to just happen right here, then I would say probably let it go. And, but we started to get a pullback, and obviously it did not happen. And I think once we got this and these, the odds of that were, the odds decreased of that happening. So 30, follow through for the bears, consecutive bear bars. Again, we're probably going at least a little bit lower, but this is not worth trading, I don't think. 31, follow through. Now big risk, stop up here, you're selling down here. Not really worth it, and you get bears buying back shorts, causing 32. Is 32 limit order bulls buying down here? Maybe a little bit, but I think this is a lot of just bears taking profits and being done with the bear trend, and that causes the really big bull bar closing near its high on bar 32. Do you buy above 32? I would not. I would rather just wait. The best case scenario I think for the bulls today is to get back to the bar 19 low and close the open gap with this breakout point. I think that's pretty much the best they can hope for. We're probably not getting up here. This would be the next magnet up here as a possible high of the trading range. And then next would be the top of the channel. But this is out of reach. This is probably out of reach. So I thought the best the bulls could do was get back to the bar 19 low, meaning any reversals up are most likely going to be minor. This is now an outside down day, as it has been over here. So keep in mind, 70% chance when you get an outside down day that it's going to close in its lower third. 33, a bear bar closing near its low, possibly a double top with, 28. But in 30% of the time when you get a double top bear flag, the second leg up is a buy climax, which is what we had on bar 32. So you can make an argument that 40% chance selling below 33, we're going to get somewhere down here, a measured move down of the double top bear flag. But I'm not really all that confident. I wouldn't really take any of these shorts. It's not worth it. There's probably going to be buyers around the 31 low. If you sold the close of bar 31 and then you saw bar 32, you probably are pretty disappointed. So you're trying to get out back around the bar 31 close if you can. 34, a bear bar closing near its low. We're probably going to get back to the bar 31 close, but again, I would imagine there's going to be buyers below 32 and below the bar 31 low, since there's not, the next magnets are pretty far below. So it's not really worth for traders to do much of anything at this point. We did end up testing this close, which I suppose was magnet, but I don't think it was all that important. So disappointing follow through if you sold below 34 on 35. So maybe some bears buying. I think, these sell to close bears disappointed, buying back shorts at a small loss. Maybe they're scaling in. Are bulls stepping in? Yeah, bulls will step in around here. They're trying to get that second leg sideways up. We should at least test the high of this bar, since it was a really big bull bar. So we're probably going to get back to this high. And you know that the bar 24 high is, you could argue spike. Well, we basically had a spike, and then a channel, and then we had another spike and another channel. So I thought that the bar 24 high, you could argue, is the high of a channel, and we should get back to that spot. 36, a bull bar closing near its high. We're probably going a little bit higher. We should get to the moving average, but I'm not sure how much higher. 37, consecutive bull bars. So this is a second leg sideways up. Something that to notice is the bulls are getting pretty strong closes. They're not overwhelming the bears by any stretch of the imagination, but they are good looking bull bars, 32, 36, 37, and even, bar 20. So the past couple bull closes, again, there haven't been very many of them, but the past couple bull closes have been pretty strong. So does that mean you're looking to buy and get a big swing up? No, it just means you should be a little bit suspicious with your selling, and it's probably time to think of this as a trading range and not as a bull or as a bear trend. Disappointing follow through on 38. If you bought above 38, you're buying right on the moving average. That's really not a good idea. You know that when we get to the moving average for the first time in 30 bars, there's going to be sellers there. 39, a bear bar closing near its low. Can you sell 39? Yeah, it's a low 2, 33, and then low 2, 39, closing just below the moving average, and we found sellers at the moving average. So it's a reasonable sell. Probably looking to test the close of 31. We should test the actual 31 close, because this has been such a strong bear trend day that I would be surprised if these bears remain trapped. So we should get back to this actual close, but I don't know how much more to the downside is left after that. Again, if you're selling here, I think the problem is how strong these bull bars have been. So it's a bit concerning to take the short. We might get one more leg up, but you could argue that the traders who bought above 37 knew they were probably going to not going to make money. They're hoping to get a huge bull bar, and they didn't get it. Basically a vacuum test of the 19 low, and they didn't get it on 38. So they're using the tail on 39 to sell out of their longs, and that's what's causing 39 to close near its low. So you can sell it. You might need a bit of a wider stop, and if you get a bull bar closing near its high, you just get out. But you can definitely take the short. Big follow through on bar 40. Bear bar closing near its low. Yeah, good for the bears, huge bear bar, but we've had a lot of big bull bars in the past 10 bars. If you look at from bar 24 to bar 40, this has been a little bit more of a trading range. So, you are now, bar 40 is now low in the trading range, big bar, big risk. Again, take out the rest of this, and it's obviously relevant, but you have to realize that the past basically 15, 16 bars, we've been sideways. So if you're selling, you're selling 39 high in the trading range, small bar, good. If you're selling down here, big bar, big risk, low in the trading range, really not what you want. Probably more of a profit taking zone, which is what we get on 41, which is why if you sold here, you were like, well, why, I thought there was so much bearish energy. Why is it all dried up? It's because you're selling a big bar towards the bottom of the trading range. Disappointing follow through on 41. And some bears buying back shorts around the low, 42. Some bears might hold on to their position after 40 in case we do start to get a collapse down to 5,600. But instead, disappointing follow through, so bears buy back shorts 42. Not worth selling 43. Just looks like a second leg, possibly a second leg trap. Could be some sort of wedge forming, 27, 31, 43, maybe 31, 44, 54, something like this. So outside down bar 43, and then outside up bar 44. So it's an OO pattern, 44. I think it's a reasonable buy above 44. The obvious problem is we haven't had a close above the moving average yet today. If you're buying above here, it's even at this point, it's a little bit, of a stretch to think we're getting back to the 19 low. We still might because of how strong these bull bars are, but the bulls need to get a bull bar closing above the moving average. If you're buying above here, we're not going to go straight up. Probably going to be sideways up. So it's a bit of a difficult trade to take. It is an OO breakup mode pattern. So it's probably not the worst thing in the world to buy, you are buying towards the middle of the trading range too, which isn't ideal, but it's still probably okay to take the buy. But the problem is you're buying again in the middle of the trading range. So you're probably not going to get, huge follow through. 45 consecutive bull bars, but a big tail on the bottom of 45. So not sure how much higher we're really going to go. Again, it's probably going to be 2 legs sideways to up, but they could end up being more sideways. 46 does not close above the moving average, which I think is disappointing for the bulls. They were hoping to get consecutive bull bars closing far above the moving average, and instead they got a disappointing bar on 46. 47, outside down. So some bears taking profit, or bulls taking profits. It's 3 bull bars up, and then an outside down bar, and then another bull bar closing near its high 48. Again, I think this is not very strong. We're going to get a second leg sideways to up, but 48 could be that second leg sideways to up. It is an IOI pattern, 46, 47, 48. Bears know if we trade above 48, we might get a bounce back up into towards the high and in this general area. So they do everything they can not to let it trigger and get a bear bar closing near its low 49. I think exit below 49 if you're long, and then you get a bear bar closing near its low 50. We're probably back to always in short. The problem is 48 closed above the moving average. 48 should not have closed above the moving average if this was going to continue to be a giant bear trend. And, why are these bull bars so strong? So if you were selling down here, I just want to see if they made 5 points. They did not. If you were selling down here, you were probably taking a chance we get a collapse to 5,600, and you were probably just going to get out above any bull bar, which, 56. So you end up getting out basically break even. But it's a reasonable sell, 51 or 50. But the problems are, why are we getting bull bars above the moving average? Why are there so many good bull bars? You're taking a chance we get another breakout below the channel. It might happen, but you need, you're going to need good follow through. Disappointment, 51. So a big doji bar. Again, it's not the worst. It's not the end of the world, but we need to get, pretty good follow through rather quickly here. The good bear bar, 52. It did test below the low of bar 44. The bulls who bought above here and stayed in are going to be buying more down here, betting against follow through, betting we're going to at least rally back up into this area, the 44 high, which we did during 59, causing some selling. But anyways, inside bar 53, it's a low 1 short. It's really not all that good. If you are, it's still always in short and probably okay to be short, but it's really not ideal. 54, as you can see, buyers below 53, and then an inside bar 55. So I'm thinking dojis. A bounce on 56, a big tail on the top. I think this is bears giving up. If this would not happen, or at least we would not have traded above 56 if this was going to be the collapse, and we probably would not have gotten so many doji bars. So this wasn't all that great for the bears. 57, a bull bar closing near its high. I think this is bulls giving up. We're probably going to get a couple legs sideways to up. We might have to bounce back up into this area. 58, follow through for the bulls, but a tail on the top. More follow through 59, but again, a big tail. It's a bad low 1 short for the bears after 4 straight bull bars, so probably buyers below. 60, a bear bar, but it's still expecting buyers below. And then second leg up, 1 pullback 2 on 61. So probably going at least a little bit higher. You can see we test the bar 39 low. And then, none of this is worth buying. It's a bull surprise on 61, yes, but this is a trading range, right? You should now be trading this as if we've been in a trading range all day. So, at this point, I thought the bears had a chance here, but at this point, I'm just seeing a trading range, and I'm going to trade the rest of the day the same way I would trade this. The bulls, if we're going to go here, it's going to be probably pretty obvious in one pretty big bar. So it's not worth buying above 67 though. Yes, we're going to inside bar 50, 65, 66. You could argue IOII, which is what it is, but it's really not worth taking any trades. You're just buying the top of a trading range. There's probably sellers somewhere up here. So disappointment 60 set on 68. Can you sell 68? Yeah, small bar towards the top of the trading range. You can sell looking for 2 legs sideways to down, 1 pullback 2, which you do get. And then we go sideways into the close. So where do we go for stop orders? I don't know. Maybe you could buy above 6 and put a stop below here and hope it's the low of the day, but you need good follow through. And once you see this, you're reversing to short immediately. You cannot sit in this trade after 8. 8 is too good of a trade. I think 8 is, like I said, 50 to 60% chance. That's the high of the day. So sell the close, sell the close, sell the close. It's sell the close on these, but it's really low. So if you're selling, you're going to have to sit through a pullback. 13, low 1 short in the spike phase. Low ones usually lead to pullbacks and then trend resumption. In this particular case, it was a low 1 in the spike phase, so it was a little bit better. Generally, low ones are at their most reliable when they're in the spike phase of the trend, like it was here, and you're hoping that you're getting a spike, a pullback, and then the low one's going to start some sort of channel or just get a collapse, but the channel is a lot more likely. So that's what you're hoping for, is a channel down if you're selling below 13. Sometimes, again, usually low ones, especially in trading ranges, will lead to deeper pullbacks and then trend resumption. But here, we could just go without the deeper pullback. So more follow through. 18's climactic. I would not sell. You probably got to get out above 20. But again, tough circumstance. So you can just sell again below 22 if you wanted to, or just let it go. That's probably fine too. Sell the close 23, but hard to do this low. Nothing else really worth selling, nothing worth buying until 39. You could probably sell 39. And you probably just got to get out around the 31 close. You have zero true risk, and you've made, I don't know if you're probably about pretty much a quick 10 points. Yeah. So to the new low was a little more than 10 points. So I think down here you just get out. Maybe you can buy, but it's minor. You can probably sell, but you're hoping, you're probably going to end up being disappointed at some point and just exit. And you probably buy above this for a second leg up. You can probably sell below that for a second leg down. On the daily chart, we have a big bear bar closing near its low. So we're probably going to start to pull back soon. I would imagine, the bulls did a really, really good job. A lot better than I think most traders were expecting. So while I do think we're going to get back to here, this is probably going to start to form a trading range. I would imagine this is the top of the trading range. It's, obviously it's possible that we get an inside bar tomorrow, maybe an IOI pattern, and then we just continue to rally. But I don't think it's very likely at all. I think maybe, 30% chance of that. I think, this to me symbolizes trading range. I do think we come back into this tight trading range. How far down does the trading range go? I don't know. Again, we've done a lot more than I expected the bulls to do. So I don't know how far down we're going to go. That the first reversal down is going to be minor, and we're probably going to have to form some sort of double top if we're going to get below this tight trading range. So I'm expecting just sideways. We might have to get back to 5,500, but even that's pretty far right now. So I think the first target for the bears is pretty obvious, the June 28th high. And I think, once you get there, you just see where you go from there, probably July 1st. But again, I expect the first reversal down to be minor because of how strong this has been. The weekly chart, it's still a bull bar, but this close is pretty important. This is a bear bar closing near its low. Bears could argue low too, and they want a bear bar closing near its low so that bulls might dump their lungs and we get a huge bear bar closing near its low next week. Do I think that's going to happen? First off, do I think we're going to get a humongous, just a big sell off if this closes near its low? Probably not. But the odds of it are increased if it's a bear bar. So I pay a lot of attention to the open of the week tomorrow. 56.29 is going to be a really important price, and traders on the weekly chart are going to be fighting over it. How does this impact the monthly chart? Well, the month, it's looking okay for the bulls so far, but they're still reasonably, we're only 100 points above the open, and we're still pretty early in the month. So bulls want this to be a bull close, but if it's a bear close, we might have to pull back to somewhere in here. But probably getting a bit ahead of myself talking about the monthly chart. I'd rather give it another week or two and then see what the bar is doing. Yeah, that's today.